Thank you for joining me. I'm Alex, and I want to talk about Avis today, or Avis. Who knows, really. So, Hertz just went bankrupt, and I figured it's time to have a look at how other car rental companies are doing and whether or not they were profitable before the current situation happened, and thus kind of infer whether or not it's profitable to buy them since things are starting to reopen and I expect there to be a second shutdown, but people don't necessarily agree with me on that. So what they do is car rental, which I kind of alluded to. Current price $16.72, which gives them market cap of just over $1.2 billion. Dividend yield is 0, and again, don't expect that to change. Revenue $9.2 billion, slightly up. Earnings $302 million, which is almost double the previous year. And that gives them a PE of 5 with a forward PE of just over 3. So obviously they were expecting things to go quite significantly in the right way when they released earnings. I wouldn't be surprised if they don't expect that to happen anymore, but obviously, barring the current situation, they were quite profitable and they were quite a decent buy, I would say. Total assets $23 billion, total liabilities $22 billion, both up significantly, and total stockholders' equity of $656 million, again up significantly, but I wouldn't be happy with this balance sheet if I had it. So, not surprising that a company that has to buy a bunch of cars for people to rent so they don't have to buy their own cars has almost balanced assets and liabilities. So obviously that is a fairly minor issue at this point, but I don't really like this balance sheet too much, and obviously they invested quite a bit of money and got quite a bit of loans just to, get the assets up. So overall, I would say that the PE is amazing. The revenue growth is just not there at all. And I don't like the balance sheet. So for a growth investor, there really isn't any growth. So there's really nothing here. For a dividend investor, there is no dividend, so there's nothing there. And for a value investor, I really don't like the balance sheet being this balanced. I do quite like the PE. I don't like the lack of growth, and I don't like the lack of dividend. So overall, I would say that even for a value investor, even without the current situation, I would maybe open a small position. I definitely wouldn't open a major position in a company with a balance sheet like this and a complete lack of growth. Now, obviously, with Hertz probably gone, who really knows? There might be a lot more room for growth here, but overall, I would say that the PE being quite amazing as it is, there might be an opportunity here for a very small investment, but overall, I think that I will stay away and probably invest in something else that might have a similar PE but better other financial stats. So that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.